I like to look at this chart just to kind of see where the markets are at sentiment-wise. And that's very important. And yeah, there is a very intimate relationship between the Elliott Wave principle and market sentiment. They're basically the two sides of the same coin, so to speak, in terms of being able to gauge how people are likely to respond, and what impact that has in terms of how the market ends up trading. So I pulled up this chart here of the DSI along with Bitcoin, just to kind of note what the most recent reading has been here at 14.6. And this was registered like around the end of last week, I believe, on the 7th. And what's significant here is that this is the second most bearish reading for the entire history that this indicator has been tracking sentiment in Bitcoin. Okay, this is 3 years ago, January 2019, when we hit a reading of 12, and this has gotten as low as 14.6. Okay, so that's kind of significant because it does suggest that sentiment has become, or bearish sentiment has become so extreme that the market should be ripe for a turn. And we'll get into it in a moment, but I think we're already seeing that turn starting to take place. Now this low on the DSI here, this was January 2019. Now, in December of 2018, just a few weeks before this particular reading, which is here, okay, this low ended what we count as the primary wave 4 bear market. In other words, the bear market that erupted following the bull market high back in December of 2017, lasted a whole year. Okay, and then bottomed out here. And so this measure reached its lowest point in January. And that's something about sentiment that, or it illustrates something about sentiment, which is that sometimes bearish sentiment will linger even beyond the actual low in the market. Okay, and so we're seeing a case of that happening here. But then what subsequently followed, okay? The markets then went to rally from January 2019 into June of 2019. And as that indicates here, that was a move of 315% at that time. Okay, now we had lesser DSI readings here. Okay, here for, the very key low back in March of 2020. Okay, we had over a 1,400% move up off of that low. Now this is the third wave, so that explains, the high percentage gain in here. Okay, but even during the big market lows that were made back in the early summer last year, we still got a 134% rally. Okay, so at least on this basis, Bitcoin sentiment is at an extreme where a very big rally could start to happen if it hasn't happened already. All right, and we'll look at that possibility. Okay, so we're getting a very clear message here from sentiment. And the thing to understand about sentiment analysis is that it operates in polarities, okay, between extreme optimism and extreme pessimism. So when you get an extreme reading in one direction, ultimately it gives way to its opposite. Okay, as happened here. Okay, when the most recent highs were being made, remember back in the fall, we had like two new all-time highs, one in the 66,000 range, the other in the 68,000 range. This is the peak here associated with the 66,000 move. And this kind of a lesser sentiment reading, but not by very much, that attended the 68,000 high. Okay, and then basically, even here, you can count a 1, 2, 3, 4, 5 kind of declines for this, which is another suggestion that this has ended. And so now we're starting to see this turn to the upside as Bitcoin appears to have found some kind of a low, I think one of significance. But again, the way patterns will be more revealing about that. Another look at sentiment here. I guess you may be familiar with the ETF, BITO, that came out, ironically, right around the time that Bitcoin was making its most recent all-time high. And that isn't necessarily accidental, because oftentimes whenever a new instrument is introduced, it's usually at a height of popularity within that market. And sometimes it can be the kiss of death. When you get an inflection point, that's then where the market turns lower. Okay, and so that's kind of again is sort of another aspect of sentiment analysis. But here in BITO, we're able or people are able to trade options on that through the equities market. And so that gives us an opportunity to look at put call data as is being recorded in the option trading in BITO. So this is the 27 strike. Okay, basically the at the money strike now, because BITO is trading at around in the $27 range today. So this is the at the money strike price. And when I do these put call analyses, I prefer to work with open interest, more so than volume, because the volume changes from day to day. Whereas the open interest shows you basically what has been the accumulation in terms of people buying put contracts versus call contracts. And so if we take the ratio, right, so it's the number of puts here divided by the number of calls, we get a put call reading of 3.54. Okay, so if you know anything about put call ratios, that's an extremely bearish reading. Okay, I mean, it means that for every, in this case, that for every call that's being bought, people are buying like 4 puts. Okay, so that's definitely betraying a very bearish outlook here. And so that is also consistent with what we just saw with the DSI. Okay, where sentiment seems to be reaching some kind of an extreme. Okay, and I should say this is for the January contract, okay, which is going to expire at the end of next week. And so this, again, this shows the accumulation of put contracts here, far exceeding, that of the call purchases. And so this is especially bearish, okay? So anyone who suggests to you that the optimism here is like off the trust bullish, I would say that, that this data begs to differ with that point of view. And just looking at maybe at some more anecdotal kind of evidence, and this chart is derived from Google Trends based on the search term Bitcoin. And so what's interesting here, well, this last spike up here, well, this is associated with the highs that occurred last spring in Bitcoin, okay, when it had reached that first all-time high up at 64,000. Okay, and so as the market sold off and pretty sharply at that time, the searches or the level of interest, which is basically what this is meant to represent, just plummeted. Okay, and so these lows here happened, again, more or less coincident with the lows that happened in the actual market. Okay, and although we've put in 2 new all-time highs since then, okay, this never returned to the level that it reached back in the spring, back during that April-May period. Okay, no, it turned up. The interest level was starting to perk up here, but this little spike here, this is the 66,000 high. Okay, and this one is the 68,000 here. Okay, and then we had the selling that happened between like November 10th and maybe ending this past week. And I was seeing an uptick in interest again. Okay, but again, none of this is extreme. All right. Similarly, if we do this based on the search term just cryptos, okay, similar phenomenon here. Okay, where we get the big downdraft in interest associated with the highs that were made in a number of cryptos between April and May. And in this case, we started to see a little bit of an uptick following, the lows across the market in the early summer, but yet this dipped even lower. Okay. Then we got an upsurge here in interest, and again, that was in October with the first, the 66,000 all-time high. And even with then the market pushing up to 68,000 already, the levels of interest were starting to drop. Okay, up until most recently, and this should be like around the end of last week, that we get this low here, and now this week we're starting to get the levels of interest rising here. But again, this is the whole crypto market, not just Bitcoin specifically. So I take note of all of these things because of what what they can contribute to the wave analysis.